another day, another discussion. So thanks for joining my channel. If you're watching, my name is Alfred. I'm with Summit Beacon, and this is my channel. And this channel is focused on educating and teaching you, my clients, my visitors, my followers, and those of you that I just happen to swing by. This channel is dedicated to teach you about credit and how to manage and how to successfully maintain good credit. And if you have bad credit, how to improve your credit. Because what we're finding out nowadays, credit is a huge factor in your life. Not just credit, but your credit score and your credit profile, your credit report. It is a big thing for not only getting a loan, getting a credit card, sometimes even applying for a job, getting a promotion, or even trying to apply for an apartment. Your credit score is going to actually be a huge factor in many of those things that you may or may not be aware of. So today's discussion, we're going to talk about what is utilization. So there's a term out there that is in the credit world. It's called utilization. This is a huge thing. This is a huge thing that you need to know, because if you're not under a good understanding of what credit utilization is, then you're going to be caught off guard when you go and you try to apply for a loan for that car that you're trying to buy, or the credit card that you're trying to acquire, or the house that you're trying to get for you and your family. If you don't understand what credit utilization, it's going to be a big detriment when you're trying to apply for a loan. Because here's what credit utilization is. Credit utilization is the percentage that you are using against your credit that is available for you. So you have to have this credit utilization in a good standing, because if you're in over your head on too much credit against the credit that you have been allotted, then creditors are going to see that, like a loan company, a credit card company. They're going to see that you leverage yourself too high, and you don't want that to happen. For example, let me just give you an example of what credit utilization is. A lot of people don't really know or understand this, because I get this question asked to me all the time with my new clients, and they want to understand how to manage their credit, or what is it that's affecting their credit. So here's what's affecting your credit in that phrase, credit utilization. Let's say you have a credit card. Okay, and to make it easy, let's say your credit card has a $10,000 limit. Okay, the $10,000 limit is your credit limit that you're allotted to use for that particular credit card. Now, the credit utilization is how much credit did you use, or are you carrying a balance against that limit? So let's say in 1 month you have a $10,000 credit card with $10,000 credit limit, and you use $5,000. If you use $5,000 in 1 month, well, your credit utilization is 50%. Okay, and if you didn't pay off the $5,000, then it's going to get reported to the credit bureau that your utilization on that particular card is $5,000. Now, say you use same credit card, $10,000, but let's say this time you used $3,000. Okay, and you used it $3,000 in 1 month, and you were able to pay back and make a payment of $1,000. So now you have a balance of $3,000. Okay, that would be 30% credit utilization that gets reported to the credit bureau. So you're carrying a balance, but your 30% is your credit utilization against your credit limit. Does that make sense? So it's the percentage that you're using, or you're carrying a balance against the limit that is allotted to you. Now, if you're over 30% on a constant basis, then it's going to get red flagged, and it's going to go to the credit bureaus that you're holding this credit card above a 30%, and it's going to bring down your credit score, because the credit bureaus and the credit agencies, they don't like to see that you're using more than a certain amount. You can use more, right? You can use the whole maximum amount, but you need to pay it back before it gets reported. or pay a certain amount back before it gets reported to enable you to continue to have good credit. So therefore, if it gets reported that you're using 50% of your credit card, well, that's above that 30% threshold, which is kind of a good number to stay under. It's going to lower your credit score. So if in a particular month, if you, like I said, let's say you use $1,000 on a $10,000 credit card, well, that means you've only used 10%. Well, that's below this kind of magic number that they like using, which is 30%. It'll actually improve your credit score. Does that make sense? So if you can keep in mind that a good, most people are, most credit advisors would say that 30%, even credit card companies, that if you can keep it under 30% a month-to-month basis, then that's going to be either maintain your credit score or it's going to boost your credit score. If you go over and you're constantly maybe 80%, 90% utilization, you have used it so many times and you can't bring that down, so your utilization is so high, then it's going to report 80% utilization, 90% or 75%, and it's just going to bring your credit score lower and lower. So that's one of the factors that either will, it's either going to give you a good credit score if you can keep it low, or it's going to hinder your credit score. And your credit utilization, believe it or not, is the number 2 factor in your credit score overall. It's 30% of your credit score. Credit utilization is actually 30% of what makes your credit score. The number 1 is going to be payment history, but we'll talk about that another time. Right now, credit utilization, that's the number 2 factor that maintains your credit score in either a good positive way or a negative way. So if you're constantly, if you're being reported to the bureaus constantly over 30%, 40, 50, 60, it's going to lower your credit score. However, if you're under this 30% number, maybe 20% is being reported or 10% is being reported, that's actually going to boost your credit score. So if you can be aware of that subject, that topic, that item on a monthly basis, and I know it's kind of hard because if you're using a credit card, it's so easy, and I get it. Same with me. It's so easy to use it as you're shopping, maybe pay your bills, and you're constantly just using your credit card, and you're not really keeping an eye on that balance. But if you can get into the habit of, just looking at your credit card statement on a regular basis and see where you're at. Like I said, if you have a $10,000 credit card and you're using your credit card when you go shopping, try and pay it down before the month is over, because it'll help improve your credit score. If you let it linger and you're carrying this high balance, it's going to be it's going to report as a negative towards you rather than a positive. So if you can manage that, that's what is going to be called good credit management. And that's what the credit card companies like to see. They like to see that you as a client can manage money responsibly. And if you can, then you have created a good relationship with the credit card company. And when you do that, you will get rewarded in time with something like maybe a lower interest rate or a higher credit limit, or they could even reward you with another credit card or a loan that you've been trying to look for in the future. For example, like if you have a credit card through a credit union, right? If you can become a member of a credit union, you're a special member, because credit unions are usually private in a sense. You got to apply for that. Well, now you're in, and then if you use one of their credit cards and you have a good relationship with them because you've managed your money well, then they can give you a great deal for a car loan or something along those lines. So you want to establish this relationship with the credit card company or with the financial institution that's given you this loan. You want to be able to maintain a good relationship, and one of the methods you can do that is by maintaining a good credit utilization. If you can consistently have a low credit utilization, like I said, it's 30% of your credit score, and it'll help you in the long run. And if you abuse it, it's going to be a detriment to you also in the long run. So I hope that helps. That was just a little, bit of information. I get asked this question quite often. What is credit utilization? I have a coaching program that I help my clients. You know, if you become a client, I have a coaching program. I have different methods and means to help you understand credit and put yourself in a good position when you need it. And if you have, you know, if you're watching this and if you are struggling with your credit score or your credit profile is just a little too high or damaged and you need it cleaned up, you can contact me. My information is going to be listed down below shortly, or you can go to one of my old videos and I'll have information. You can message me, email me, and if you need help with your credit report, we clean up people's credit report. And so, you know, reach out to me if you need that help. And if you enjoyed this type of information, I will have another video coming out tomorrow, another live video, and also some of my old videos are talking about various subjects on this matter. So I thank you for watching. I thank you for listening, and I appreciate your time, and I hope you have a great day, and God bless you.